it has been quite the year for Canadian stocks. The TSX Composite Index is up more than 13% year to date, outpacing the roughly 9% gain in the S&P 500. My next guest says the performance of the Canadian market has been impressive, but there are still plenty of uncertainties to keep an eye on. Mike O'Brien is Managing Director and Co-Head of Canadian Equity Portfolio Management at TD Asset Management. It's nice to see you.
Oh, it's great to be back.
That is your job, I guess, to keep your eye on all the uncertainties, to say that things are up there.
Well, there's no shortage of that these days.
No, there isn't. And I think it's amazing. You know, we see so much, the news flow is unprecedented. And yet, I guess people are just erring on the side of they see most of the news to be pro-business, pro-investment.
Yeah.
You know, the market's shrugging off a lot of uncertainties, isn't it?
Oh, absolutely. I mean, just as a thought experiment, you know, if you and I were sitting here December 31st and somebody had magically told us all the stuff that was going to happen between now and then, the tariff threats, the Liberation Day, I never ever would have predicted that the Canadian market would be sitting up here. Well, I think it's up 15% total return year to date or something like that, like very strong returns. So yeah, it has been a surprise, and it's amazed me just how resilient the market's been, how it's been able to absorb and look through you know, what's objectively negative news flow.
Yeah.
And yet the market just keeps chugging along.
Yeah, it really does. And one of the sectors, we'll get into this, gold's been a standout, but I mean everything has been doing pretty well. In that vein, though, when I said everything, like the breadth has been pretty strong in the past little while too. So, what does that tell you about the underlying health right now?
Yeah, well, and to your point, you know, I was looking today just to sort of refresh my mind, and 7 of the 11 sectors in the TSX are up double digits year to date. So that, you know, that is breadth. And to me, what that says is investors are looking through the noise of the moment and clearly expecting better days ahead in 2026. Mm-hmm. Whether those better days arrive or not, you know, that's for 2026 to tell us.
Yeah.
But clearly, you know, it's a glass half full mentality right now.
Yeah, I know that you've got 3 key themes that you're keeping a close eye on as we go forward, and I wouldn't mind just unpacking that a bit, because I think that's the 2026 you're talking about, what you're looking for. So the first one is maybe Prime Minister Carney, the business-friendly approach, but you're also got an asterisk beside that to say, let's see what actually happens.
Yeah, I mean, we're Canadians, but it's kind of, you know, I'm from Missouri on this one. I think that's the attitude, you know, the show me type of situation. So, you know, I think when you look at the moment we're in today, I couldn't imagine a prime minister with a better resume for today, for what Canada needs. You know, there's no prime minister I can think of that's been better suited, has a better understanding of economics, of finance. So, you know, he's the man for the moment. Mm-hmm. And I would say, to date, he's been saying all the right things. You know, have to be a pretty partisan bone to pick if you're going to, you know, sort of try to poke holes in the messaging from the new federal government. So that's all good, but that only takes you so far. And I think, you know, you can understand why there would be a residual skepticism, particularly in places like Alberta and the oil patch.
Yep.
This residual skepticism, you know, from businesses who've, you know, kind of been ignored or even sort of vilified to some extent by the previous governments. You know, here's this new breath fresh of air, but is he really going to follow through? Mm-hmm. And so I think there is that residual skepticism that's going to hold business leaders back from, you know, fully getting behind, you know, this nation-building agenda. So I think it's really important for the Prime Minister and for the federal government to deliver some real results, you know, hopefully sooner than later. So what might that look like? You know, we're all waiting for these announcements about big infrastructure projects, but, you know, something more practical that can be delivered concretely would be, you know, when you get to the fall economic statement, make it very clear that, hey, we're paying attention to what's going on in the States. We know that the Trump administration is trying to pull business investment out of Canada into the U.S. We've seen the tax incentives that are in the One Big Beautiful Bill. We're going to match them, or something like that. You know,
better them.
Or better them. You know, so something like that, something concrete that can give the business leaders confidence that, you know what, this guy talks the talk, but he also walks the walk. He's looking to get things done. And so I think if he can win over the confidence of corporate Canada, you know, then I think they will get behind this agenda.
Okay, I want to circle back on that later about CUSMA, but that's the next one. the Canadian economy, for the most part, has shown resilience in the face of this trade war, which I think people are probably find a bit surprising. And I say that on a blanket statement. If you're living in Windsor, it's a much different reality right now. But where are you seeing the wobbles? That's the second theme you're looking at.
Yeah, and I think you hit the nail on the head, which is, tell somebody in Windsor or Oshawa right now that things are fine, or tell somebody in the aluminum industry in Quebec that, it's all good.
Right.
Obviously they're getting hit pretty hard.
Exactly.
But the bigger picture for the Canadian economy as it stands today is we currently have a bit of a shield around us, and it's this USMCA exemption, or the USMCA carve-out, that has been put into place, where the headline tariffs of 35%, across the board 35% headline tariffs, they would be very, very damaging if applied across the entire Canadian trades picture, or Canadian export picture. The reality is today, because the USMCA compliant goods are being exempted from those 35% tariffs, the real tariff burden that businesses in Canada are feeling today, outside of aluminum, outside of steel, outside of autos, is actually quite modest.
Right.
So I think that's part of the answer as to why the Canadian economy has been resilient to this point, is it hasn't felt the full extent of what some were fearing was coming in terms of tariffs.
Yeah, but
it doesn't mean there isn't more to come.
Yeah.
And there likely is more to come.
Yeah.
But right now, as long as that USMCA exemption shield is able to stay in place, it gives the Canadian economy a pretty good chance. And clearly, to back that up, you've also got federal and provincial governments that have made it very clear that they're going to be there with a lot of fiscal support. And if you can get inflation a little more under control, hopefully the Bank of Canada will be able to offer some support on the monetary side.
Yeah.
All of that said, though, I don't think in any way, shape, or form we should say the Canadian economy is out of the woods here.
Yeah.
It's a very difficult time. The economy is in slow growth mode. Unemployment has kind of stabilized a little bit of late, but it's still, unnervingly high, close to 7%. So, I think that it's not smooth. It's not clear that we're all through this at this point.
We talked about two themes, Michael. We talked about what you're watching for, Prime Minister Carney, and just the follow through to do the things that you need to do for Canada. The resilience of the Canadian economy with an asterisk, and the last one is Bank of Canada as it wrestles with some sticky inflation, although it looks like it's cooling off a little bit.
Yeah, so we just had an encouraging July CPI report here this week. That trended in the right direction. But that came on the heels of, some uncomfortably hot or warm CPI readings. So I mean, what we're dealing with right now here is, whichever metric you want to try to parse to get to the underlying inflation rate, we're sitting somewhere around 2.5% to 3%, which is at the high end of the Bank of Canada's comfort range. So at a time when, we really want to be able to rely on the Bank of Canada to maybe provide a little more monetary support for the economy here if things get a little bumpy. It's very important that stickiness in the inflation trend starts to dissipate. Yeah. So today was it was a very encouraging report. We're moving in the right direction. But in and of itself, I don't think one report is going to move the needle for the Bank of Canada. I think we're going to see more follow-on. And I think ultimately the real decider in terms of which way rates go here is just how strong the employment picture holds up. If we start to see the unemployment rate ticking up through 7%,
which kind of hinges on the fact of what's happened with Kuzma and those types of things too, right?
So if we do see some more weakness in the labor market, I think that will really force the bank off the sidelines. But in and of itself, the inflation report we saw today is encouraging. We're moving in the right direction.
I want to finish off with, I started off by saying, 13% gains in the TSX. You said 15% total return. Yeah. Markets have done very well in the States too, though we're starting to see a little bit of leveling off on some things. But what about sectors you see opportunities in as you go forward? Because it's been a hot market.
It has been a hot market, and I think if you look at historical valuation metrics, we're kind of sitting up at the higher end. Everybody points to the U.S. market as being very expensive on a historical basis, and it is. But the Canadian market as well, even though we trade cheaper to the U.S.
Yeah, but we came from the bottom too.
Yeah, so but we've moved up to the higher end of where we would traditionally change. So I think the first point there is investors do need to be selective. when I look across some of the bigger sectors in Canada, clearly golds have stolen the show this year. With gold bullion at prices where it is today, they should be generating some pretty strong cash flow. But the stocks have moved a long way. So I think you need to have a more optimistic view on where gold is heading.
Right. All the good stuff is priced in.
So yeah, you need to see gold continue to trend higher, I think, for that leadership to continue.
Yeah.
The financials to me look pretty interesting. The banks are the ones that we tend to focus on. They've had a good run. They're going to be reporting earnings next week, so we'll get a good look at how the credit picture is shaping up in Canada. And I think that's the real swing factor for the banks is, are we able to get to the peak of the credit cycle this year? See that start to tail off into 2026, 2027, or do we have some further bumps on the credit picture that we see loan losses continuing to stay stubbornly high into next year? So that's what I'm really watching for in the banks. The other big sector, energy, I think you have to be a bit of a contrarian right now. It's been out of favor, but the fundamentals are challenging, particularly for oil. OPEC is forcing barrels into a market that's already pretty well supplied. So like I say, even though the companies themselves are executing well, being very disciplined about returning capital to shareholders, the outlook for the oil price is a little challenged here right now. So that's not it's not the favored place. So like I say, you got to put on your contrarian cap if you're going to go into there.
And just quickly, I wanted to ask, from a power standpoint, I often hear about the themes of power generation for all these data centers that people are using. Any interesting things you're seeing in that shape up? Yeah,
well, I mean, there are so many different derivatives of this AI data center play. Not necessarily power per se, but one of the stocks that has really benefited in the Canadian market is Cameco. Obviously, with the nuclear power is now back in favor, very much so. Cameco's kind of got a stranglehold in that whole value chain from the mine right to the reactor. So, that's an area that definitely plays to that thematic.